What if I told you that right now, in one of the most volatile and unforgiving markets we have seen in years, there is a single stock sitting at a 55% discount to what Wall Street's biggest and most sophisticated banks say it is actually worth, and those same banks are quietly increasing their positions by triple digits while the average retail investor is running for the exits? That is not a rumor. That is not a theory based on gut feeling. That is exactly what the cold, hard data is showing us right now with IREN. Welcome back to Smart Stock Sam, the channel where we cut through the noise and let the numbers do the talking. Today, we are doing a full, unfiltered reality check on IREN, answering the exact question every smart investor should be asking right now, which is whether this stock is actually worth buying at these levels. We are going to break down why the technicals and the fundamentals are lining up for what could be one of the most compelling setups of the entire year. We have got the institutional ownership data, the valuation gaps that will make your jaw drop, the short squeeze engine that is coiling tighter by the day, and the massive upcoming catalysts that the market is completely ignoring. Lock in, because this one is loaded from start to finish. Now, before we get into the price action, let me give you the 3 pillars holding this entire thesis together, because this is the foundation that every single piece of analysis we are about to do rests on. Pillar 1 is that despite a brutal and relentless stretch for the broader markets, IREN has established a structural floor at $39 that has been tested and validated repeatedly under fire. Multiple shocks hit this stock. That floor did not crack. It held every single time. Pillar 2 is that IREN is not just a Bitcoin miner anymore, and this is the part where the mainstream narrative completely misses the boat. They have undergone a full transformation into an AI cloud powerhouse, and their $9.7 billion contract with Microsoft, as massive and impressive as that sounds, is actually utilizing only 16% of their available power capacity. That means 84% of their infrastructure is still sitting there right now, waiting to be monetized with high-margin AI contracts. The market is pricing in 16% of the story while ignoring the other 84%. And pillar 3 is what I am calling the technical coil. Short interest is elevated, days to cover are dangerously low for the short sellers, and the stock is effectively a compressed spring sitting on top of a lit fuse. There is one metric buried inside their power funnel that completely reframes the entire valuation story, and we are going to get to that in just a moment. But first, let us talk about what actually happened between March 2nd and March 13th, because if you were watching the chart during that stretch and you thought the thesis was falling apart, the data tells a completely different and far more compelling story. Back on March 1st, the model designated a primary buy zone between $38.50 and $40.50. Now here is where it gets genuinely interesting. On Monday, March 2nd, IREN dipped immediately into that exact zone, hitting a low of $38.83 before ripping aggressively higher. Within just 48 hours, the stock touched a weekly high of $47.25. That is an enormous move in essentially a heartbeat. Then came what I am calling the deviation, a violent 7 to 8% gap down on March 5th. Most retail investors looked at that red candle and panicked. But here's the question you should be sitting with right now. Why would the most sophisticated institutional money on the planet keep buying into a stock while it was absorbing that kind of selling pressure if they did not have an extremely high conviction in what the stock is worth? And to fully appreciate that answer, you need to see exactly what IREN had to survive just to hold that $39 floor. Think about what this stock absorbed. We had triple the inflation data that economists expected from the PPI report, a reading that rattled the entire fixed income and equity complex. We had escalating geopolitical tensions sending shockwaves through every risk asset on the board. And then IREN itself dropped the announcement of a $6 billion ATM equity program, which is precisely the kind of headline that sends retail investors stampeding toward the exit without reading a single line of context. Any one of those shocks individually could have sent a weaker stock into a sustained death spiral. Instead, the $39 structural floor held firm on a daily closing basis, and by Friday the 13th, the stock was recovering to $41. That floor is not just a line drawn on a chart. That is a battleground where institutional capital has stepped in every single time to absorb the selling, and that behavior tells you everything about where the real conviction is sitting. Now here is the metric that most people are completely missing when they look at IREN, and I need you to pay very close attention here because this reframes the entire story. The $9.7 billion Microsoft contract gets all the headlines, and yes, it is a genuinely massive deal, but that contract is utilizing only 16% of IREN's current power portfolio. 16%. That leaves 84% of their capacity as what I am calling a revenue void, untapped, world-class infrastructure sitting on the ground right now, waiting to be filled with high-margin AI contracts. The market is currently pricing IREN as though that 84% simply does not exist. When you fully absorb what that infrastructure gap means for the forward revenue trajectory and the fair value calculation, the 55% discount we keep referencing starts to look almost conservative. And here is the question that should be keeping you up at night. Could we actually be looking at a situation where the true discount is even deeper than what Wall Street's current models are capturing? The catalyst to start filling that void is already in motion, and it is sitting in their warehouse right now. IREN recently secured 50,000 Nvidia Blackwell GPUs, bringing their total fleet to 150,000 units of the most powerful AI compute hardware in existence. Management is projecting an annualized run rate revenue of $3.7 billion by the end of 2026. This is not aspirational language. This is an active roadmap backed by hardware they already possess. When you align this fleet expansion with the available power capacity sitting idle at 84%, the execution of the AI cloud transition is not a possibility. It is a mathematical inevitability. The only question is whether you are positioned ahead of it or watching it from the sidelines. So then why did retail investors flee when that $6 billion equity program was announced? Because the word dilution triggers a deeply conditioned panic response, and fear does not pause to read the fine print or model the downstream revenue implications. But here is what the smart money actually did while retail was panic selling. Goldman Sachs increased their position by 233%. Envestnet added 152%. Citadel, Jane Street, and D.E. Shaw are all actively accumulating. Total institutional ownership is now hovering at approximately 42%. These firms do not buy into dilution narratives. They buy into capacity expansion and infrastructure deployment, and they have been aggressively defending that $39 floor because they have run the valuation models and they understand exactly what this stock is worth when the full infrastructure is monetized. So what is it actually worth? Let us look at the hard numbers. As of Friday, IREN was trading around $41.58. Wall Street consensus is sitting at nearly $72. H.C. Wainwright has a price target of $80. Compass Point is sitting at $105. And Bernstein is calling for $125 per share, which represents over 200% upside from current levels. Even independent intrinsic fair value models place the number at $94.84. By almost every professional and quantitative metric available, you are buying a dollar for 45 cents right now, purely because of short-term noise and a wave of retail panic selling. The dislocation is not subtle. It is not a matter of interpretive disagreement. It is hiding in plain sight for anyone willing to look at the data without emotion. And on that Friday the 13th, the broader market gave us one final confirmation of just how strong the institutional bid underneath this stock truly is. The S&P 500 and the Dow were hitting new yearly lows on the session, but IREN closed green at $41.58. When a stock refuses to go down while the entire market is bleeding out around it, that is not luck or coincidence. That is institutional support refusing to yield, and it is the clearest and most reliable signal of relative strength you will ever find on a chart. Now layer the short squeeze dynamic directly on top of that technical strength, and the setup becomes even more explosive. Between 13.85% and 14.69% of the float is currently sold short, which translates to roughly 42 to 44 million shares that have to be bought back at some point. But here is the detail that makes this genuinely dangerous for the short sellers. The days to cover is only 1.54. That means, if any meaningful piece of positive news hits the tape, the shorts have almost no time to exit without tripping over each other in a frantic rush to cover. They are trapped in a room with a very small exit, and the institutional buyers are standing directly outside that door with their hands on the handle. For the week of March 16th, the technical setup is unusually clean and well-defined. There is a significant put wall sitting at $41, where market makers are highly incentivized to defend the price mechanically. Above that, pivot resistance sits in the range of $42 to $42.40. If we break through that pivot on volume, the call walls at $45 and $50 begin acting as price magnets, literally pulling the stock higher as market makers are forced to hedge their growing exposure. The coil is tight, the pressure is building beneath the surface, and the release valve is sitting right above current price. If you are evaluating an entry, the actionable buy zone is $39.50 to $41, aligning directly with Friday's closing level and the institutional support zone that has been defended repeatedly. The hard stop loss is $39 flat on a daily closing basis only. If the stock closes below that number, the thesis is invalidated and you exit without hesitation. For targets, the conservative first target is $42.45, clearing the 20-day moving average. The aggressive second target is $45, aligning with the primary call wall magnet. And the third, short squeeze target is $51, triggered when we break 42 with high volume and those 44 million short shares begin panic covering. And beyond next week, the biggest repricing event on the entire calendar is building on the horizon. The Sweetwater site energization, projected for April 2026, represents a 2,000 megawatt facility coming fully online. This is the single event that permanently realigns IREN's market capitalization with its fundamental reality as a global AI infrastructure leader. Whether you are here for the short-term technical squeeze or the long-term transformation into a dominant AI cloud platform, the window to accumulate IREN at these deeply discounted prices is closing, and it is closing faster than most people realize. Before we wrap up, I want to be completely transparent with you. Nothing in this video constitutes financial advice of any kind. I am not a licensed financial advisor, and everything discussed here is strictly for educational and entertainment purposes. Always conduct your own thorough research and consult a qualified financial professional before making any investment decisions. Past performance does not guarantee future results, and all investing carries risk, including the potential loss of your entire invested capital. Smart stock. Sam gives you the data and the framework. What you do with it is entirely your own decision and responsibility. Now, here is the question I want you to answer in the comments section right now. Do you think IREN successfully fills that 84% power capacity void with new AI contracts before the Sweetwater site energization comes online in 2026? Or does the Microsoft deal remain their dominant anchor revenue source through the end of next year? Drop your full take down below, because the comment discussions on this channel are genuinely some of the sharpest investor conversations happening anywhere on YouTube right now. If this analysis delivered value for you today, hit that like button immediately, because it directly helps this video reach more investors who need to see this data before the window closes. Subscribe to Smart Stock Sam if you are not already part of this community, and if you want to help push this video up the YouTube algorithm and into the feeds of serious investors who are watching IREN right now, share this with someone who needs to see it. The data does not lie, and this channel never will either. Stay disciplined, honor your levels, and I will see you in the next one.